Okay, hello guys. Here's a quick one. I want to talk about bias, how to form your bias in the market. You understand? Because if you cannot deduce your direction through the mechanical approach, you cannot have a good trading experience, right? You understand? So in this short tutorial, I want to teach you guys how to form your bias through the lens of the daily time frame, right? So I will use this concept to teach you how to form your bias. Number one, you have to form your bias. These are the three pillars that we are going to focus. First of all, you have to find your bias, your confirmation, and entry. If you miss any of these things, you will not have a good um experience in the market. It is one thing to know the bias, and it is one thing to know what is giving you the confirmation. If you don't know the confirmation, you cannot have a refined entry, right? And you cannot come out clean in the market. So you want to make sure you have a good confirmation strategy in conjunction with your bias. You understand? It is not good to find your bias and enter the market blindly. When you find your bias, you equally want to find your confirmation. Your confirmation will tell you whether the bias is valid or invalid, right? So, and these are the things that we are going to focus. These are the things we are going to use to build bias in the market. Number one, we want to use key level. This could be highs, lows, and gap in the market, especially on the daily time frame. Remember, we are talking about using this concept on the daily time frame. You understand? Let me even put it for context so that bias on the daily time frame, time frame. This concept, yes. So these are the things that we're going to be focusing on, right? So so guys, so this is what we're going to be focusing on. So we're going to be focusing on this guy, key level. This could be highs, low, and gap. You understand? Then we have the previous day equilibrium level, which we're going to use our Fibonacci to mark this level. Don't worry, as we go on, I'm going to break it down. Then we have the 4 hour profile. So you have to go to your 4 hour profile. Once you have known your bias, you can buy off from any other block, fair value gap, any level for the 4 hour time frame to use it as your confirmation. Majorly, you want to see your 4 hour being in agreement with maybe the equilibrium level or a little bit closer to the equilibrium level. You understand? I'm going to show you guys how we're going to be doing it. So, right? So we're going to go to the next slide. So what is key level? Some of you may be asking. Key level on your chart, especially on the daily time frame, can be a swing low in this case and a swing high above. You understand? So basically, you are waiting for price to move towards any of the key level. You understand? When price is at this critical level, price has traded from this level, moving towards the downside. At this point, you don't want to jump into the market anymore because the majority of the move has already happened. You understand? So you want to wait for price to either go towards any of the external levels, which are the external liquidity or the high and the low. You understand? You want to see price to go to that level. Essentially, you are waiting for price to go to this level, close within the level, and give you the direction. However, it closes at that level, it is going to give you the clue of how to trade that level. You understand? So, majorly, we use high and low. You understand? We use swing high and swing low for our key level. Then when it comes to gaps, this is gap exactly the gap between this candle and this guy here. So gaps give you that confirmation. You understand? So gaps give you that confirmation that once price trade into this gap, we may likely go and push from that level towards the downside. You understand? So I will go further and show you more how to trade this thing in a logical approach, and I'll equally go to my chart and show you series of examples that you can use to mark your key level, and equally how you can trade it live on the chart. You understand? So let's check the next slide where I will teach you how to trade if the candle close tap into your key level and eventually closes within the key level. So let's go there right away. So let's go there. Um, so you can see in this example now, you can see that price eventually trade and tap into the swing low. You understand? The previous swing low, which is acting as our key level now, right? So price traded and closed within it. It doesn't just tap into it, it tap into it and clear the liquidity sitting below here all this liquidity here, you remember there are pending orders and all of that here. The market tap into it, take out the liquidity on the daily. You understand? This is on the daily, right? So you want to see the market close back after it touch this liquidity, it close back as a bullish candle. So the next candle, obviously you are waiting for the next candle to push towards the upside. So you are going to prepare yourself, mark yourself, go down to the 4-hour time frame, maybe 1 hour time frame, make sure everything aligns and you can buy towards the next liquidity above, right? Then when it comes to the gap, you can clearly see that price tap into the gap, right? And it does not close above the gap for the daily time frame. Remember, this is daily time frame. So since it doesn't close above the gaps and it taps into the gap, that means for the time being, the gap is acting as our dynamic supply level, right? So the next candle, you want to see the next candle doing something like this, printing towards the downside. You understand? This is exactly what we are going to be expecting the next candle to do, because of course the daily candle fails to close above the fair value gap or the imbalance left behind in the previous trading days, right? So you're going to be waiting for price to close, push towards the downside. So if you see the next line, you're going to see exactly just that happening. So look at it. Price did exactly that. Price tap into this level and close within tap into the gap and close within the gap, right? And the next candle that comes up starts selling towards the downside. So that is basically how to form your buyer in the market. It taps into the gap. It doesn't just tap into the gap, it push towards the downside and close within the range of this previous candle, this previous bullish candle, you understand? So it gives you the signal that, oh, price will likely push toward the downside because we have the previous day candle closing within the range of this candle. And not just that, the candle equally tap into the gap or the fair value gap. So at that point, fair value gap is acting as your dynamic support, right? You understand? So if we go further, you're going to see more example on how to trade this thing, but I'm going to give you, let's go to my chart. Let me show you how this thing works. Let me go to my chart and show you a typical example of how to trade this concept effectively on your chart. If you go to this, remember this is daily time frame, right? This is daily time frame. You understand? Look at this example. Look at this particular example right here. Before now, see this swing low, right? Can you see the swing low? Of course, I believe you can see it very well. So if you look at this swing low here, look at what price did here. Price eventually closed. Price eventually came down to this level, right? Taking down this liquidity. Let me draw the liquidity very well. Taking this liquidity, this previous swing low. You understand? Look at it. I don't know what is happening with this. Look at this. So this was what price did. You understand? Price take this previous swing low and close. Remember, the brief candle does not close below it. It close above within the range. These are the things you must keep in your mind. Your key level, once you mark your key level, what do you see around the key level? The market close. If you are even looking for a reversal, this thing should be in your mind. Does the candle close below the key level, or it close above the key level after it wicks down with the wick? You understand? So these are the questions that you need to answer. And in this particular example, when it wicks down, it eventually the body close. You understand? The body close within the liquidity sweep. So that is why we are not surprised seeing the next daily candle. Look at this beautiful daily candle starting giving us that push towards the upside. So if you go to your 4 hour, if you mark your 4 hour, let's mark the equilibrium level of this candle. Oh, guys, there's something I forgot to show you guys, right? Let's go back to my board again. Let me show you how to mark the equilibrium level for the candle that you are waiting for. Let me use this example, right? Let me use this example. Let me use this this guy here. You understand? So let me use this guy. So once you mark this is the equilibrium level here. You understand? So we're going to be this is the equilibrium level for this candle, right? Or better still, let me use trading view to analyze to do this thing for you guys. Let me pick the trading tool right here. So this particular example, once you see a candle closing like this around this key level, you want to mark the 50% level. You understand? Mark the 50% level, which is going to be acting as the equilibrium level, right? So let me paint this thing very well for you guys to understand. You understand? So look at it. Uh, So we are going to mark the 50% level. Do you understand? So maybe if this candle is our expansion candle, right? And it closes as a bullish candle, this is the 50% level, right? And the next candle that we are going to be waiting for the next day, we don't want the candle to go below this 50% level, this particular 50% level. We don't want the market, the next daily candle to go, it should weak and touch it a little bit, but not just going towards the downside aggressively. We want the next expansion to retrace a little bit. We want the next expansion to retrace a little bit, but not just weakening down a lot. You understand? Not just going towards the below the 50% level. At least let it be somewhere around here, or for fair enough, it should be touching this level, right? You understand? So once this thing comes together for us, we can now take, if it start from this place, let's say it start from this particular place and touch our 50% level, we are going to be buying from that level towards the upside. You understand? But if it closes below this level, there's a likelihood or chance of the market selling aggressively towards the downside. So that is why majority of the time we want the retracement to, or the next expansion, to start from the 50% level. I hope you understand this concept now. So let's go and continue with the live example that I've been showing you guys before now. You understand? So let's go towards the next example, right? Look at it. This was the example that I was doing for you guys. You understand? So let's mark the 50% level of this candle, right? This particular candle that give us the signal candle, right? You understand? So you can look, you can see clearly. Okay, let's use this other guy. Let's use this guy. You understand? Let's use this guy as the example. You understand? So after this candle, let's say this candle, after this candle closes within the swing low, the next candle, which give us the bullish candle, which confirms the move now that we are about to move towards the upside. That next candle start from, you can mark the level of that, can mark the level of that, you can mark the 50% level. Look at it. You can mark the 50% level. You can clearly see that the next candle, which starts pushing towards the upside, doesn't start from the below, extremely below the 50% level. It starts a little bit below, but not extreme, not around this level, not around 78% level or 80% level of this previous candle. It starts a little bit below the 50% level and push towards the upside. When it pushed towards the upside, of course, there were a little bit pullback, but that does not dispute the fact that we are in an uptrend. Look at what the price did. Even after it pulls back, it still come back to a key level again and push towards a massive expansion on the third candle, right? So this thing does work in the market. If I can go on and look for a example of a gap in the market, let's look on, maybe you can see a gap in the market, right? Look at this particular example, right? Look at this particular example. This one is a beautiful, beautiful example of a gap in the market. Look at the gap that happened on the daily fair value gap. Look at this beautiful fair value gap here. The market returned to this gap, and what did you see? What do you see, right? What do you see? We see that the next candle close with the next candle weeks down. It weeks down and takes the low of this bearish candle. Then the bullish candle, which weeks down and takes the liquidity, push towards the upside. And ever after that, you see the market pushing towards the upside aggressively. So that is a typical example of using a gap. You want to use the gap as your dynamic support from the daily. Make sure it is the daily, because if you are going towards the if you want to use your gap towards the lower time frame, as a direct support, you may be disappointed. You might be disappointed a lot of the time because price will likely use this as an internal liquidity and sweep it, and you understand, you may not respect it as a supply or demand level. But on the higher time frame, when you see this type of formation on a higher time frame, it has the chance of going towards the upside. Look at another brief example here. Look at the key level. Look at another key level here. Look at this beautiful key level here. What do you see? This is the key level, right? Price was around this place. You understand? I'm telling you how to build your bias in a mechanical approach now. You understand? Price was around this particular place. So price was around this place. This was the key level, right? And when the moment you mark your key level, this candle, when this particular daily candle printed, it doesn't tap into the key level yet. So you don't want to risk it and start buying yet. You want to wait until it touches the key level with this particular candle. And when it touches the key level, look at what happened, look at what the price did. The price don't just touch the key level and close below it. It touched the key level, swept it originally, and closed back inside the liquidity sweep. That is a beautiful confirmation there, right? And again, if you go back and put your 50% level on this particular bullish candle, as a conservative trader that want to trade with the right confirmation, so you put on Fibonacci to just the left, you discover that the next expansion candle go below a little bit of the 50% level, but not just extremely below it. You understand? So it makes this thing logical for you to trade. You understand? So if you go to your 4 hour 1 hour, you are going to see a perfect area for you. It is going to be on either on a fair value gap, or on a nice order block for you to trade off from. You understand? So this is how to build your bias mechanically, right? You don't want to be doing things randomly in the market. You don't want to be doing things randomly in the market. Let me go to 4 hour and show you how this thing is going to be on the 4 hour time frame. Let's go back now. This was the place I marked. Okay, look at it. Look at it. Very, very nice. Very beautiful. Look at the 4 hour time frame, right? Look at what the price did here. So this was our 50% level marked on the daily time frame. Look at what the price did around the 50% level. At the 50% level, it is even a nice that place is acting as a nice demand level, right? It is acting as a nice demand level. Why is it acting at a nice demand level? You can clearly see that there's a gap there. You understand? There's a fair value gap there. And this was the candle that gave rise to the gap. You understand? So in conjunction with the 50% level, everything aligned. You understand? You can use this particular candle as your demand level, right? Look at what the market tap into it, buy from here, boom, you are already in profit. And if you don't want to buy from that place, you can use this place as your demand level again. Use this particular candle as your demand candle, you understand? Because of course there's a gap there, right? So there's a gap, you understand? So buy from that level, boom, you're already in profit. So that is how to trade this thing in a logical sense. So this will be, I will call this video an end now. So next time we're going to come together again. We are going to teach ourselves deeply how to trade this concept again. Thank you. Subscribe to this channel, and I'll see you in my next video. Thank you.